one step is just to be a person of integrity, right?
Okay.
Do what you said you're going to do it when you said you're going to do it. Like really believe in and honor your word.
Welcome to Personal Finance Cat, where I share my personal take on personal finance. Hi, Emma. Welcome to the show.
Thanks for having me. Looking forward to chatting with you.
Yeah, likewise. To start with, I think you have a lot of social media following, and you are a trader, but it seems like your approach is a bit different compared to a lot of other traders. Because, in particular, I saw this long term view in trading. Can you talk about your overall philosophy in how you invest?
Yeah, definitely. So my philosophy is actually based on very systematic decision making. I think
Okay.
a lot of people treat the stock market as like a way to gamble. They look for excitement, or this stock is going up, or crypto is going up, so I'm going to buy. And what oftentimes people end up doing is they end up gambling rather than actually trading. And a good trading is very systematic. It's very process oriented. So my trading is based on technicals. We look at all these charts. So for those of you who are not in the stock market, it could sometimes seems a little bit daunting because there's all these lines on the charts, and but it's like a different language. But we're looking at those patterns, and certain patterns we've tested to work over time, sort of like a casino. Like a casino knows that no matter how much people play, they're going to win this percentage edge. And
Mhm.
that's the same thing we try to do with trading, is find patterns where we know we have like a few percentage of edge, and we just continuously do that over and over. So it's something can be learned, but it's something that also takes some time to come into it.
Mhm. So, how did you first get into it? How did you know that you were interested in trading, and how did you develop your knowledge?
Yeah, firstly, I mean, I would say trading was probably the last thing I thought I would ever do. Growing up, I was horrible at math. I hated, numbers or anything to do with that. So this was not even something I even dreamt about or thought about. But I was in my college one time, and a couple of my friends they were asking about the stock market and something, and I felt like, man, I don't know anything about what these guys are talking about. But that made me want to learn. That made me want to read books about it, take courses on it, and really research a lot of these different things. And then in college, in my university, I started what's called the Trading and Investing Society, because I noticed that there's like a society for everything, right? You want to play soccer, you want to play football, there's a society. You want to be a boxer, there's a club you can join in college. But there's no such thing as a Trading Investing Society, and that's kind of what I started. And the beautiful thing is that many, many years later now, it's still a running, thriving society in that college, which I started. So I think that's where, me and a bunch of people would meet up every single week, and we just talk about what we learned or what we read. Maybe something we were just sharing ideas, so try to learn together. So that's where the seeds were planted about the stock market for me in college.
So, how do you keep learning, right? Because I think you said that the technical analysis, it's very difficult for people, especially when you first get into it. It just seems like a foreign language. How did you kind of continue to learn from that point onward since college?
Yeah, so started originally started just with like books and videos and online programs and YouTube University, as I like to call it. There's so much information out there, so
Mhm.
that's where I started. And then eventually, I think there was an email that popped up in my inbox about some free webinar or something like that. And I attended a bunch of those things, but then I quickly learned that this industry is very hard to trust people in, because some people are really good marketers, right?
Mhm.
But you don't know if they're good traders or not. And but they're really good at selling courses. But I attended like back to back. I wasted a lot of money buying courses, programs, and things of that nature. But eventually, I found a mentor who's actually my business partner now. So he was the guy who taught me how to trade. I signed up for his course, and then the rest was history. And he kind of just took me under his wing, and he would, we would share ideas on Skype back in the day and talk about different things. And that's how he coached me into it. And yeah, now we run Live Traders together as business partners.
Got it. So, is that why you're on social media? Is this kind of part of your business now besides trading itself?
Yeah, so originally started off like with trading, which I still do every single day. And I
Mhm.
live stream my trading every single day. So social media is kind of like, as a way not only to share information, to educate and inspire other people, to let them know, hey, it's not that hard. Like you can actually learn it. Because if I was in college when I was horrible at math and I hated numbers, I would not even think this was a career for me. But it
Mhm.
has nothing to do with math or numbers, right? It's really about the psychology aspect of it. So with social media, what I try to do is I try to entertain people, educate people, inspire people, and also, when last couple of years when we had this whole pandemic thing, it gave me a really good, like, you know, really good perspective about this industry. Because while every other business was closing down, you had to work from home. I was already working from home. There's
Mhm.
no change for me, so it gave me a great appreciation for this business, and I
Mhm.
wanted to share that with other people. And I don't know if you watch the TV show Billions, but in Billions there's a TV show, and then there's this girl in there called Wendy Rhodes. So she's like the consultant, the psychologist for hedge fund managers and traders. So that's kind of what I do. So I also coach hedge fund managers and traders on their psychology aspect of it, because when you're risking millions of dollars every single day, like
Mhm.
it could really affect your mindset, right? And research was also done that trading releases the same hormones of dopamine and serotonin, the same ones you get when you have sex, when you gamble, when you do cocaine or any illicit drugs. So with traders, we get that every single day. So if you're not in control of your psychology, it could really do some damage. So that's a lot of my work now, is I coach and train other traders and investors and help them stay balanced into the moment, or rather than, thinking about this or that, or making bad decisions. So that they're trading, they're not gambling.
Well, I have to admit, I'm skeptical about trading. I'm more sort of in the camp of long term investing. But recently, I've heard, do you know Monish Pabrai? He is one of the, let's say, protege from Charlie Munger, who is the business partner of Warren Buffett. And one of the people that he talked about is this Indian based investor. And interestingly, this person, he recently passed. That's why there was some, this.
Rakesh Junjunwala.
Yes, yes.
Yeah.
He made billions, right? Just kind of by trading on his own. And he sort of, in general, people would label him as a trader because he has done a lot of just high volume trading on a daily basis. But Monish Prabhai was saying that that person, though, made, or Rakesh, made the most money from holding two particular stocks for a long time. I don't remember the names, but there are some Indian conglomerates that he invested early on. So that made me more interested in this sort of maybe a combination, let's say, of trading and long term holding. So that's why in the start I was asking you, like, what's your sort of philosophy? Because I think there was something about maybe even long term thinking in trading. Can you elaborate or talk more about that aspect? What do you mean by
Yeah,
the long term mindset?
definitely.
Yeah.
So I think nobody should just be one type of a trader. They should not just be short term or just be long term. I'm a trader. I call myself an opportunist. If I see a long term opportunity, I'll do a long term opportunity trade or investment. If I see a short term opportunity, I'll do the short term opportunity. So wherever there's the opportunity, so I don't put myself in a bucket. And so what I do is there's three different styles of trading. So one I call income producing, right? The goal of income producing style is to generate an income, to live off, to pay my bills, because I can't pay my bills on long term investments, right? I'm going to be holding them for a while. How am I going to pay my day to day expenses? So day trading is what we do for income. That's what we do every single day. And it's like a job. You do this every single day, and your goal is to make an income, to live off. And then I do what's called swing trading. Swing trading is where I'm looking for those opportunities where maybe I can hold on to a stock for a week or two, right? There's a potential move, it'll go up, and then I'll sell it, and then I'll buy it back. That's called swing trading. And then what I do is I take a percentage of everything that I make from my short-term trading. That is automatically invested. I don't even look at those type of stocks, right? That's automatically invested into long-term stuff like Tesla and stuff like that. And that I'm not touching. I'm just taking my money from my day trading, 10-20% of what I make, automatically invested long term. So that way I also, that I call wealth building. So income producing style to live off, wealth building to grow your account and to build your wealth. And I think everybody should be doing both. But for most people, I will say long term investing is going to be better, because in long term you don't have to be in front of a computer all day like I am, right? You don't have to. It also doesn't affect your psychology because you don't have to look at the stock every day. Whereas I'm in front of my computer from 9 o'clock till the markets are there, and I'm watching every little gyration, and that's not for everybody, right? So I never try to tell people that, oh, you should day trade, that's perfect for you. No, not everybody's going to be a good day trader, because day trading is the closest thing to a sport. So just like in a sport, some people are going to be really, really good, become Michael Jordans and Kobe Bryants, and half the world's not going to make it to the team, and
Right.
that's just the reality. So I think, but I like the balance of having both, because when I'm also involved in the market on a day to day basis, it helps me see things that might happen long term that other people might miss because they're not watching it.
That's good. That's a very balanced approach, I would say, and appreciate the honesty of saying that most people probably would not be a good trader. And there's a stats, I don't know how accurate it is something like 90% of people who trade end up losing money. Is that accurate? What do you think?
I think it's misleading because what that statistic counted basically every single person who ever have a brokerage account as a trader. My
Uh-huh.
mom has a brokerage account,
Hmm.
right? So in that statistic, she would be counted as a trader. But is she really a trader? No, right? So the statistic counted everybody who pushed the buy or sell button as a trader. But pushing the buy or sell button does not make you a trader. Trader goes through a whole years of learning. Like I lost my money my whole first year when I was trading, right? But then I kept at it. I refined my strategy. I tweaked it. I back tested it. I created models out of it. And then year two, year three, I finally started making money. Now, most people are gambling. Most people just buy random things and speculate on it, or Bitcoin's going to go up, I'm going to buy it. But that's not a trader. That's just a gambler or a speculator. So that's why I think the statistic is very misleading. And that research was also done by brokerage firms and hedge fund managers. And obviously, hedge fund managers don't want you to trade. They want you to give your money to them so they can manage your money and they can charge you the fees. But most hedge funds underperform the market. You are better off buying the S&P 500 or the QQQ or the NASDAQ, and you will beat 99% of the hedge funds out there. But the hedge funds want to have these kind of reports so that they say, oh, don't do it. You're going to fail. 90% of people fail. Give us your money, right? So that they can charge you the fees. And I think that's pretty low integrity, really.
Yeah, yeah. And I think going back to something you said earlier, there's a lot of people in this industry gives the bad rap, right? Because it's hard to find someone you can really trust. So how do you weed out, let's say if someone is interested in learning more about trading, how can they weed out the bad ones and find the right type of people to learn or type of strategy to adopt?
Yeah, I think the biggest thing is whoever you're listening to or learning from, are they willing to show you what they're doing, right? In
Hmm.
real time, not after the fact. Not
Hmm.
saying, oh, yeah, I bought this stock and I made a money on it, but, well, you never told anybody,
Yeah.
right? So, like, can they show it to you live in real time and walk you through their process rather than telling you, oh, I made a lot of this money? So, the reason my company is called Live Traders is we trade live every single day, right?
Mm-hmm.
Every single day I trade is live streamed with my account open, with my camera open, my audio is there, almost like you're sitting next to me. So win or lose, you'll get to see it in real time. There's nothing I can hide. My platform is available, and you can see my P&L in real time. So I think if somebody's willing to show it to you, then obviously that tells you a lot, right? But if they're just selling a course or a program and they're not actually doing it live, then well, how are you going to trust that person, right? So I think that is one of the biggest reasons. And then also, you gotta see what you feel about the person. Do you actually like who you're listening to? Do they even match your philosophy? Because if
Hmm.
you're a long-term investor, you have no business listening to a day trader, right?
Hmm.
If you're a day trader, you have no business really listening to a long-term investor. So find somebody who aligns with the style of investment or trading that you want to do. And then do you like their personality? And first of all, and would you trade places with them? Would you want their results? If so, that's a great person to learn from. But if you wouldn't want to trade places with them, then don't learn from them.
So for someone who's just starting out, who just became interested in investing, how can they decide? Like you were saying, whether they want to be a long-term investor or a trader, how can they figure that out?
I think first thing you have to do is to figure out how much time do you have to give to this business, right? So, for example, I have a lot of clients that have jobs. They're doctors, they're lawyers. They don't have any time to sit in front of the computer all day, right? So they're not going to be day traders because they already have a job. But
Mhm.
do they want to? Can they invest? Yeah. Can they do the swing trading where you buy in a stock, holding it for a few weeks? Yeah, you could do that, right? So
Mhm.
time commitment will help you figure that out. Now, if you're somebody who like, I'm retired, I sold my business, I got all the time in the world, sure, then you can start day trading. Because for day trading, you have to be in front of your computer at least from minimum 9 a.m. till 12 p.m. So
Mhm.
if you can be in front of your computer for that period, then day trading might be for you. But if you're busy, you have another job, you have another business you're running, you're an entrepreneur, then maybe you should not look at day trading. You should look at longer term investing or swing trading. So that's one thing. But then the other thing also is your personality type, right?
Mhm.
If you're like a little nervous person, you're a little bit jittery, you're gonna have a tough time doing long-term investing, because you're going to look at the price every single day. It goes down, you feel bad one day. It goes up, you feel great the next day. It's going to be a roller coaster. So I think that's another thing you have to figure out. And maybe you are somebody who has the long-term mindset, but you're just not that fast on the on your mouse or keyboard to get in and out of stocks all day long. Then that's how you will decide that day trading is not for you. So there's many different things that go into it: personality types, how much time do you got to give to it, and also the capital. Because the SEC FINRA rule is that you need at least $25,000 if you want to be a day trader minimum,
Yeah.
right? And that's the minimum. Whereas if you're an investor, you can invest with $1,000, doesn't matter, right? So I
Mhm.
think that's you have to look at.
Okay. What do you think are the differences, or how do people view like the fundamental analysis versus technical analysis? Because I feel like even for a long-term sort of investor, right, they still should go in with some kind of analysis, right? I wouldn't recommend people to just believe the mission of the company and whatnot, the marketing speech, so to speak. Like, what do you think are the kind of definition, or how do you think about fundamental analysis versus technical analysis?
Yeah, so I mean, as a basics, I would say for fundamental analysis is mostly when we're reading about the company, we're reading their account statements, their balance sheet, we're looking at their management, the CEO, the business model, where that's going. So we're really evaluating the company, the product, and the market. Whereas in technical analysis, we're just looking at charts. We don't even care who the CEO is. We don't even care what the company does. It's all about the chart and the patterns, right? So I like charts and patterns because charts and patterns don't lie. They are what they are, right? Whereas a CEO could lie, a company could lie, right? A balance sheet could lie. A company could say one thing and then next day something else happens, right? And how many times have we seen over the last few years people talk about, oh, these are such a great companies, but their stocks just keep going down. So it doesn't matter if it's a great company, the stock is going down, right? You're still going to lose money. Whereas in technical analysis, we are looking at those trends. So if something is going down, we're not going to be in it, right? If something's going up, we're going to be in it. So I think technicals are subjective. Technicals are objective, whereas fundamentals are subjective because we are taking people on their word. And I mean, we've seen that over time where people say, "Oh, this is a great company," but the stock's down 90% or
Mhm.
80%. So
Mhm.
clearly, fundamentals is not the way to go. And we've also seen that, sometimes companies report great earnings, right? But the stock still goes down. Or companies report bad earnings, stock still goes up. So clearly, fundamentals is a very hard to trust or even rely on. Whereas technicals will tell us the truth of what's actually happening, what the actual price was in the past, what it is now, where it's trending. So I like to do that. And technicals are the only way you can trade, because if a company is going to be great long term, but how am I going to day trade on that information, right? So whereas technicals, you can look at the charts on a day to day basis.
One thing I found hard to understand the technical analysis is, so if you look at the charts, you try to see the patterns. How do you predict? Because it's all about what's going to happen in the future, right? Because that determines whether you make money or not. But then we know that past doesn't predict the future necessarily, right? Because when you were saying, well, if it's going down, we're not going to be in it. But how do you know that it's going to go down or up? What's the logic of technical analysis?
So we look at certain things such as moving averages, but it's very simple as just literally drawing some lines. So draw a slope. Which way is the chart going? If you draw a slope and it's clearly sloping down, then ask yourself the question, why are you still holding that stock? Right?
Mm,
Whereas if you draw a line, like a trend line on
mm,
the chart sloping higher, well, then you want to be in that stock. Why would you get out of that stock? So a
mm,
lot of it's so simple, but problem is, it's not easy to do in the moment because our human brain comes into play, right? Your
mm,
stock is going down, then you keep holding. Maybe it'll come back up. Maybe let me buy more. I think it's a great company long term. You start justifying the stock going down. You start saying it'll come back up. It's a great company. Oh, this CEO is going to do this, but it's going down, right?
mm,
So it's like you have to get your own thinking out of the way, and that's the hardest part about trading is take out this brain, put it on the side, don't think what's going to happen, just look at
mm,
what's actually happening. And I think that is the basis for technical analysis, because fundamentals is just, it's hard to trade. And there's actually a really famous joke that goes around the Wall Street and hedge fund world, where a technical trader and a fundamental investor are having dinner. They go to a steakhouse, they're having a dinner, and then they're cutting the steak with a knife, and while the fundamental investor is cutting the steak with the knife kind of goes up in the air, and both of them look at the knife. The knife is coming right back down and stabs the guy in the foot. So the technical guy is like, "Why didn't you not move your feet?" He's like, "Oh, I thought it'll go back up." So, and that's what most people do when it comes to fundamental investing. Whereas the
Mhm,
technical investor, like, "Hey, the stock's going down, let's get out of it. If it starts going back up, we can always buy it back. We can
mhm,
always buy it back. There's nobody stopping us from buying it back. So
mhm.
get out, get back in."
Okay. I'm not in the camp of being able to really watch the trend continuously in front of the computer. So to me, fundamental analysis is more like, if you think about long term, yes, you can have bad CEOs, you can have whatever market emotions that make the stock price go a certain way. Basically, Warren Buffett's approach is you look for companies that have competitive, durable advantage that can survive through a lot of turmoil, including bad management, right? So you look for companies that you understand the business, you understand the economics. So there's certain companies, for whatever reason, they just produce that advantage and it can last for a long, long time. The idea is that you endure through that. That's how I think about fundamental analysis, but you can trade on that, to your point, right? Because a lot of random factors can change the stock price in certain directions. The technical analysis to me, because I've seen cases where it's an upward trend, but all of a sudden it just like drops almost like a cliff. So how do you like handle that? To me, that's the biggest danger of trading, is catastrophic event that could just change the direction.
Yeah.
So what's your strategy around that?
Yeah, so that's where we use orders known as stop loss orders. So as the stock is moving in our favor, we keep raising our order, right? So let's say we buy a stock at $10, and we say, okay, if it goes to 9, I'm going to get out, right? But now it goes to 11, so then I'm going to say, if it goes to 10, I'll get out, and then we just keep raising it up. So as the stock is going up, our orders are going up, and then eventually you'll get that big move down as you talked about. But then we'll be out already at around that area with a stop loss. And another question I always ask people is, think about why that stock is going down, right?
Mhm.
Well, because people are selling, right? So if people are selling, do you really want to be in it? If it's a fundamental company, why would hedge funds sell it while they're telling you to hold on and keep holding on for the big move, long-term investing, but they're the ones selling it, causing it to go down, right? So
Mhm.
they don't believe in their own philosophy that they're preaching, right? So I
Mhm.
think that is kind of how I look at it, is to inch your orders up as the stock is going in your favor. So as it goes up, you're locking in your gains. So when it
Mhm.
starts to downturn, you're already locked in your profit. Now, maybe if it's what we call a shakeout, where it goes down a little bit, you get out, then it comes back up. Well, you can always buy it back,
Mhm. Okay. Okay. So how do
but
you
you
select?
avoid that disaster.
Uh-huh.
You
Right.
avoid that disaster. Yeah.
Yeah. Gotcha. So how do you select your companies to trade? Do you just use some metrics to see the upper trend type of companies, or how do you do that?
Yeah, there's very specific, like, certain patterns and strategies that we have. They're all based on charts, like different patterns. Where basic one is just like a resistance pattern, where let's say there's a stock where you clearly see every time it goes, let's say, to $10, it comes right back down, right?
Mhm.
And it comes back to 8 or 9, and then it goes to 10 again, and it comes back down to 8 or 9. And then it goes to 10 again, comes back to 8 or 9. So when it
Mhm.
finally breaks above 10, we'll buy it. Then usually it'll end up going to like 15, 20, right? And then he'll find a new floor and a new ceiling. So I
Mhm.
think that is just like a one pattern, but there's many different patterns that we use that are based upon charts that we've tested over time, and that's what I use to make trading decisions.
Mhm.
When it comes to investments, I only ask myself two questions, fundamental questions, which is, you know, is this company going to be more relevant or less relevant in the next 5 years, right? And then the second question I ask myself is are more people going to be using this or less people going to be using this in the next 5 years? Those are the only two fundamental questions I ask. And the same question, let's say 5 years ago, if you asked yourself the question, is Tesla going to be more relevant or less relevant in the next 5 years? Are more people going to be driving Tesla or less? The answer to both of those were more. Great, that's going to be a great investment. Same
Mhm.
way, if I ask myself the question on Amazon or Google or even FedEx, right, 10 years ago, and I asked myself the question: is FedEx going to be more users or less users in the next 5 years? Well, obviously more, because if e-commerce increases, people are going to buy more online, more packages are going to be shipped around the world. That's the basic fundamental analysis I used 5, 10 years ago to make these amazing investments that I have today.
That makes sense. So maybe we can switch gears a little bit and talk about your non-trading business. So you mentioned that you have, it sounds like some kind of platform to share your day trading. And you also mentioned that you maybe do these like psychological consultation with hedge fund managers and so forth. So what other businesses are you involved in besides trading?
Yeah, so as a trading, as you said, was a kind of the primary thing that I do, and then I have livetraders.com where we do courses, training, seminars for people who want to learn how to trade the stock market. We do live events around the world, and then we have the live stream where me and my business partner we trade live every single day, win or lose. People get to see it in real time, and yeah, some days we lose, you know. So, but they get to see it in real time, and I think that's the fun about it. Is like everybody's kind of trading together, and it actually makes me a better trader too because like I'm like everybody watching, I gotta be trading well. So
Yeah.
that's one part of the business as well. And then and I do coaching, I do training, I do advisories for hedge fund managers and psychology. I have a book out, Prepping for Success, 10 Keys for Making It in Life. It's on iTunes, Audible, audiobook, and Amazon. So
Mhm.
that book has nothing to do with trading investing. It's all about like what I've learned in my journey to
Mhm.
becoming successful. So that book is a personal development book. It's all the things that I've learned, and I've spent, I can tell you, millions of dollars
Mhm.
hiring coaches, mentors, attending seminars, workshops, retreats, spiritual retreats. Like I've really gone in to develop myself because I learned very quickly that trading is all about mindset. It's
Mhm.
all about mindset. So all of my success is attributed to the mindset that I have. So I put everything together in the book and the
Mhm.
audiobook version.
Yeah. Yeah.
And yeah, and I have real estate. I have all other type of assets around the world. I have Airbnb business that I do. So properties in India and London
Oh,
that we put on Airbnbs, and that's kind of like passive.
cool. So where are you based?
I'm in New York City.
Oh, okay. Cool.
Um,
What's your book titled again?
it's called Prepping for Success: 10
Prepping
Keys
for
for Making It in Life. This one right here.
Okay,
Um, so
great.
that is all of what I've learned in my journey, and it's a very short read
Uh-huh.
because I hate books when people just give story after story. It's like a massive fluff, but I'm like, okay, there's like this one point that I
Mhm.
really liked about the book, right? So I just made it very concise. Here's the 10 things you need to do. What
Mhm.
I did, that got me where I am.
So you mentioned 10 things, but if there's one thing or one action step that you recommend people do, what would that be?
One step is just to be a person of integrity,
Okay.
right? Do what you said you're going to do it when you said you're going to do it. Like really believe in and honor your word. Because a lot of times, people say that, like, oh, yeah, but I'm a person of integrity. I'm like, really? When is the last time somebody called you and you said, hey, I'm just in the middle of something. Let me call you back. And you never did,
Mm.
right? Or you ran into an old friend at an airport or a shopping mall. You're like, hey, good to see you. We should totally catch up. And then you make no attempts to ever catch up with them, right? So you're
Mhm.
just saying things for the sake of saying it. So I always ask the question, why would you say something that you don't mean? Well, to try to look good, to try to avoid looking bad. It's That's an insecurity. That's a psychological issue. We got to
Mhm.
fix that,
Yeah.
right? And a lot of time people will say, "I'll start this thing from Monday. I'm going to start my business." So many people said before COVID, "I wish I had the time to start my business." And when they had all the time in the world, we were locked in for like a year. They didn't do anything with that time. So you're
Mhm.
saying things that you don't mean. How will your life improve if you keep saying things and don't follow through on them? So that's
Mhm.
the biggest key I can give you is just like make sure you really mean what you say and you
Mhm.
follow through on your word. Because if you don't follow through on your word, what happens is your brain starts saying, you know what? He doesn't believe in himself. She doesn't believe in herself. And then if you don't believe in yourself, how do you expect clients to believe in you? How do you expect the universe to believe in you if you don't believe in yourself?
Mhm. That's excellent. But do you have any recommendation on how people can avoid doing that? I agree. I think a lot of people say certain things, and I'm guilty of that sometimes too, just to be nice. But then how do you do that? Like, what's the recommendation, from a psychology perspective to be more
Yeah,
genuine?
Yeah, I think we all do that. It's just to catch ourselves when we do that, to start getting some realization. And the more you start catching yourself and realizing over time, it'll change. Because most people don't realize it. We don't realize we're even doing it, right? As we're talking, I mean, I'm sure we could think about certain things that we did or said. So as we start noticing it more, we start giving it attention a lot more, it'll start to correct itself. But then the second thing is to not apologize for it. Don't say, oh, I'm sorry, I'll do it next week, Don't say that because you will do it again. Right. So what you have to do is you have to put things in place to ensure it doesn't happen again. So I'll give you my personal example. Right. I was struggling with my health a lot. I wasn't working out. I was traveling for business all the time, and I was just too tired to work out or anything like that. And I kept saying it to myself, I'll start from Monday. And then Monday comes and I'm like, well, it's the 28th of the month, I'll just start from the first. And then, it's the first, but it's like November. So you're like, I'll just start from the new year. And I
Mhm.
did that to myself a lot of times. And I caught myself saying that. I'm like, wow, that's a lack of integrity right there. So then instead of apologizing for it or saying I'll do it next week, I said, I'm just going to put things in place to ensure it doesn't happen again. So I hired a trainer. He comes the same time every single day to my home. We're going to work out. Like,
Mhm.
it's no question, right? So I made sure there's something now to ensure I don't fall back into that place. And other thing is scheduling things. So if you actually want to do something, you said you're going to do something, great. Make sure it's on your calendar. There's a time
Mhm.
associated to it. And my team hates me for that. My employees would sometimes come to me and they'll give me something like, oh, we're gonna get this done. I'm like, great, by when? They're like, I'm like, they're like, oh, Wednesday. I'm like, awesome. Wednesday what, 3 p.m.? They're like, but that's what we need to do. We need to put it on a calendar this time, this day, and then make sure that's exactly what we're doing on that time and that day.
Mhm. Mhm. Okay. No, that's excellent. So one other thing I wanted to ask you, because you mentioned you have this partner, and it sounds like it's a very successful partnership. But I also heard horror stories of having a bad partner. Do you have any advice on how to find a good partner and how to make the partnership work?
Oh yeah, definitely. Because I had three partners when we started, so
Okay.
now we're down to just me and one. So I partnerships are, that's a tough one. But I will just say that take your time. If you're ever thinking about getting into partnership with somebody, really take your time, really get to know them, and really get to know them at a personal level, right? Like before you actually get into partnership. Because what happens is sometimes we meet some people, we really like them, and we're like, oh, this is going to be great, and we're in that good feeling and we make decisions in that good feeling without actually thinking about it. So I think it's important to get to know the person, get to know their working style, meet them outside of work, right? Really formulate that partnership and then make sure you set boundaries in the partnership very early on. You clarify things very early on in writing. This is what I'm responsible for in this partnership. This is what you're responsible for in this partnership, right? Having those guidelines. And then if somebody is, you should have boundaries. If somebody is not respecting your boundaries, you should let them know right then and there, hey, and not in an emotional way. I think a lot of people take partnerships very emotionally. Oh, you're going to do this, I'm going to do it myself, blah blah blah. It should be very unemotional. It should almost be like, hey man, you did this, I really would like it to be done this way, so I don't really appreciate how it went down, hopefully you can correct it. And then but making sure you let them know that boundary early on, because a lot of times the first year is the honeymoon period. We don't do anything, we don't say anything, everything's great. And then on year two you start putting your boundaries, but you've conditioned them with the bad habits already. So you have to put that early on, and then also make sure that they have skills that you don't have, right?
Mm,
Because if you are a great marketer and they are a great marketer, well, who's going to do the operations? Who's going to do all the other stuff, right?
mm,
Whereas if you are an operations person and they are an amazing marketer, now you are complementing each other so you can respect each other.
mm. So in your partnership, do you do these like live trading, for example, together, or what's your division of responsibility?
Yeah, so my when it comes to live trading, we both do it, right? So
Yeah.
I'll, let's say, come on from 9 o'clock till 11 o'clock. He's
Mm,
gonna come on from 11 o'clock till 12 o'clock. So we both do that. But then when it comes to business, he would be responsible for creating, all the educational materials or the programs or quality control, making sure everything is good to go. He'll handle all the finances part of it and paying people and the employees and stuff. He'll handle all of that, and I'll handle the operations, guiding my team on what the next strategy is, how we're going to do it, where we're going to host the next events. So we divided it into very different ways, so that he's not telling me what to do, and I'm not telling him what to do. We're all both, you know, working cohesively, basically.
mhm, mhm. Got it. Sounds good. So, if there's one aspect that you would say attributed to your success the most, is it the partnership? Is it your knowledge? Is it your passion? What is the one aspect that you would say?
I would say my hunger and curiosity to
Okay.
always want to learn and be better. Like, even though I'm at a what most people would consider a successful level, I still attend workshops. I still attend personal development seminars. I still attend retreats. I was just at a retreat last week. We did breath work, we did meditation. Tonight, actually, right after our call, I'm heading to the airport. I'm going to do a cold plunge, like a retreat, and a breath work and a yoga retreat. So I treat myself to these things so I can always never burn out. I will stay fresh and I'll meet great people that have other inputs that add to me that I maybe didn't learn something and somebody told me something. And that's how I've learned everything in my life is through other people. Nothing I've come up with my own. It's
Mhm.
all things that I've taken from different people, right? I join other people's masterminds. I join other people's groups. Like I am in that world every single day, and that's where I've met the most, the best people, the best ideas that I've gotten, and people who really look out for you and they push you. So surrounding myself with people is what I would give pretty much most of all my success from, because
Mhm.
I'm an introvert, right? I sit in front of my computer most of the time. So if I don't go to these things, then well, I'm never going to get any good ideas. So I
Mhm.
think that's what I would give my success to, is just to get myself out of my comfort zone all day long.
Oh, that's great. Do you have any recommendation for the type of retreats, courses, masterminds? What do you recommend?
Yeah, there's many different ones. It usually depends on different people. Like some people love the spirituality aspect of it and learning in that environment. So for those
Mhm.
people, there would be some different recommendation I make. And then some people like the motivational, kind of a develop. Everybody has a different learning style, so you have to first discover your learning style. But like some of the things that made an impact on me, uh, there's a workshop called Landmark. Landmark has a pretty big impact on me. I think they have centers around the world nowadays. They do online programs as well.
Okay.
That I think was probably the biggest needle mover for me when I did that in 2016. I think that changed the game for me.
Okay.
Tony Robbins events are great events to go to.
Mhm.
Um, Brendan Bouchard events are great to go to. And then
Mhm.
there's a lot of spiritual event, like Jesse Itzler does a lot of these ice camps that I'm going to right
Ah,
after this call. So
mhm.
Jesse Itzler's ice camp, I'm going to that one right after today. And yeah, then there's a lot of great people that I am aware of, but those are just some that come top of my mind.
Excellent. And what does true success mean to you? I think you mentioned you're at a level that is considered successful by a lot of different means, but what is the true success that you're striving for?
So true success is having success in each and every area of your life, right? And more importantly, you being okay and satisfied with where you are at in each of those areas. Because a lot of times, you see somebody who's like financially very successful, but what if their relationships are a mess? Are they really successful? Probably not, right? Same way you see somebody who's in the best shape of their life, they're extremely fit, right? But they're broke. Is that really success? Not really, right? So it cannot be one dimensional success. You need to have like harmony in all of those areas. So health, wealth, right? Your own mental health, love, relationships, friendships, social circle. I think all of those things come into play. And it doesn't need to be like you need to be the six pack ab fit or you need to have this billions of dollars. As long as you are personally satisfied with where you are at in each of those areas, I think that is true success, where you are content and happy with where you're at in your life.
All right, so two last questions for you. Do you have book recommendations besides your own book that we talked about?
Yeah, I would say first one I would say definitely Mindset by Carol Dweck. That's a great book. Second one I would say is Three Laws of Performance by Steve Zaffron.
Mm-hmm.
A third one, obviously, my own, Prepping for Success. And another one I would say, if you're in the spiritual side, then you'd probably like Hermetics or Ye Are Gods by Annalise Scarin. Those are really, really some really deep, solid books. But honestly, I mean, everything comes from our religious text. If you actually, people actually spend time and forget about what they think about religion, but like actually study the religious texts, like the Bhagavad Gita, the Bible.
Mm-hmm.
Those there's wisdom that comes from it, and if you really look at it, all the personal development industry is actually formed from those texts, and just in a different way. People say it in a different way, but it all comes from all of those texts.
No, it's very interesting that all your book recommendations have nothing to do with trading. I love it.
Right. Yeah.
Mindset and things. Yeah. Excellent. All right. Last question. Where can people find out more about you?
I think the best place would be Instagram or Twitter. My username on both of those is Delta90, DELTA99ETI. But Instagram and Twitter is the best way to find out about me. And if you're interested in learning how to trade, then you could go to livetraders.com. You could schedule a free call. You're going to get a free intro course. That would be the best for trading. And as far as my book, you could find that on Amazon, Barnes Noble, Audible, iTunes, Walmart. You buy your book. It's called Shopping for Success 10 Keys for Making It in Life.
Cool, cool. And that website you mentioned, is it free to join or do you have to sign up as a member?
Live Traders?
Uh-huh.
Yeah, so that is free to join. As soon as you make a free account, you're going to get a free guide and a free 2-hour video course that I recorded, which is
Mm-hmm.
the basics of technical analysis, which everybody should watch, even if you're an investor.
Uh-huh.
Just watching that 2-hour video will at least give you some tools that you can use in your investments to make better decisions. And that's completely for free.
Cool, cool. Excellent. All right. Thank you so much, Anmol. It's been a great conversation. Thanks for sharing all your insight and knowledge.
Yeah, it was great chatting with you. Thanks for having me.